Welcome back to a new video, and today we're going to take a look at the Usdchf. If you're new to the channel, a sub would be really appreciated, and as always, if you enjoy the content, smash that like button and let me know down in the comments below exactly what it is that you would like for me to cover in my next video. We're going to take a look at USDCHF from a fundamental, technical, order flow and a sentiment perspective, and look for the best way forward that we can approach this situation that we have here. Now, starting on the monthly time frame, the first thing that we can see is the market had tested and rejected the strong level of support. Now we can see how the market had pulled away from that level aggressively. Now we also have this candle with this long wick. Now normally when you see a candle like this, you can expect the next candle to go and fill in the wick. So we can expect this next monthly candle to go and fill in the wick, to go and test that monthly area of resistance that we have over there as well. Now, this wick over here, it's basically just a retracement on a lower time frame. So the market makes an impulse, correction and impulse, and this wick basically tells us that there was an impulse and a correction, and we can see how the market started the next impulse now if you look at the weekly time frame, basically, so what do we see over here? Now we can see this is the retracement that I was speaking about, and we're starting the next impulse. But if you look at the weekly time frame, you can also see how the market printed this information. Now by definition, in technical analysis, by definition, if the market reaches the neckline, you should get a rejection from there for the market to continue lower. But if the market breaks above the neckline, you can expect the market to pull back to the neckline before continuing higher. Now we can see that's the situation that we had over here. The market printed this information, broken above the information, so we can definitely expect a pullback to the neckline for the market to complete this inverted head and shoulders before the continuation to fill up the wick that we've identified from a monthly perspective. Now here on the weekly time frame, what do we have over here? Now we can see how the market is busy breaking above a very important structure, because we can see how this level over here had acted as a level of support once, well, support a couple of times. The market then broke above that level, came back, tested it as support and support again, and we can see how the daily candle is about to break above that. Now as you know, once support gets broken, it becomes resistance, and when the resistance gets broken, it becomes support. Now the best way that we can approach the situation is first for the market to print a impulse, and then on the correction to the 0.382 we can start looking for a buying opportunity. Now the way in which we can measure the 0.382 is by taking off Fibonacci from the low to the high and make sure that the 0.382 lines up perfectly with the structure that we have there. Now if we look left over here as well, we can see how we've got structure in this area as well, so we can definitely expect the market to go and test that level first before coming back and then continuing higher to fill up the wick that we've identified on the higher time frame as well. In doing so, the market would then also give us this inverted head and shoulders that we've identified from a weekly perspective as well. Now looking at the order flow data, so what the big banks, hedge funds and institutions are doing, and for the gentleman who asked me where I get this data from, here's the Telegram link. So just put that link into your browser and it should be able, or just go on Telegram and search for @COT_report and you should be able to get the group of where this data gets released. So looking at the Swiss franc, so we're only going to look at the data for the Swiss franc because all currencies trading on the spot, they trade against the US dollar. So when you look at data for the Swiss franc, you're actually looking at data for the Swiss franc against the USD. So we can see here based on the last report how hedge funds came in and they started closing minus 1.4k of their buy positions, so they're not interested in buying the Swiss franc, and they also came and they added above the 2,700 short positions. They also added another 74 shorts as well. Now we can also see how the overall net positions over the course of last year, we went from a positive 13k all the way to a negative 10.71k. Excuse me. Now if you look at the order flow data, so what the retail traders are doing, we can see currently we've got about 64% of retail traders buying and we've got about 36% of retail traders selling. Now I always say that you don't want to be on the side of the retail traders. In this case, you also still don't want to be on the side of the retail traders, because the one thing that you do not want to do is you don't want to buy this market at the current price, because it is testing a very strong structural area as well. The best way to approach the situation is to wait for the market to go and create a perfect impulse, then on the correction, you can start looking for buying opportunities, applying the rules of your own strategy. Now, the fundamental data that we need to speak about as well. So we know we have the NFP coming up tomorrow as well, but over and above the NFP, we also have interest rates hikes that's coming, and it's starting. So Mr. Powell came out yesterday, and with the Fed meeting, and the market obviously expected the market expected, the Feds to only hike interest rates as of April because they would then the tapering process would have ended in March, and they would then start the interest rate hikes only in April. And then Powell came out yesterday and he said, you know what, we are probably going to start the interest rates, start hiking the interest rates sooner than expected. And if you look over, across the board with the USD pairs, you can see the USD pairs are getting strongly quite aggressive. So the bullish momentum on the dollar is quite expected in the short term. So we can definitely expect this move to take place here as well. Now, I hope you guys enjoyed the video, and I hope you guys enjoyed the content. And as always, smash that like button for the YouTube algorithm, and thank you so much for your time. Thank you for watching, and cheers for ears.